2, shorting bootcamp starts right now. Lesson number 2, shorting trend line cracks, extended version. Also, my shells. Now, these are the top 2 shorting opportunities that represent themselves, in my opinion, day in, day out, besides finding those high of day spikes, which, of course, we're going to get those. These are the other 2 that you're going to see day in, day out, no matter what you're looking for. You're going to see trend lines form, and you're going to see shells formed, where kind of an area of support or resistance is formed, and it's clear cut, and it tests over and over and over and over and over and over. We know when that gets tested over and over and over and over, a support area does what? Just like a trend line, it eventually cracks. And so what we're waiting for is the first full candle out of the trend line to short. Not a wick, team. Not a wick. We want this to be completely outside of the trend line. 100%. 100% of the time. You know, if we wait for, say, if we don't wait and we just instantaneously get in here, a lot of these happen to us, right? These lower shadows. Oh, we're in. Here we go. We're cracking the trend line. And then, boom, it bounces up on us. We want the full candle to close outside of the trend line. Now we are entering in when this candle right here opens. Right here, team. When this candle right here opens, you're in. You're in. You're money. That's where you're in. And a lot of the time when you get red, because you're always going to be red out, instantaneous of another red candle, you can really count on it being a money short opportunity. And yes, we're talking AMC, so it doesn't matter if the ticker, this is back when AMC was rocking and rolling last year. It doesn't matter if the ticker is $20 plus, it's $100, it's $5, it's $1. You're going to get trend lines to form, and you're going to wait for them to close outside, right? Wait for the first full candle outside of the trend line to short, not the wick, right? See, any of these you look at, and I'm going to go through these because I love doing this. This is AMC now. I'm going to go through different time frames. So this right here, team, 1 minute time frame. Here's a 2 minute time frame. So that's why I like a 1 minute time frame, because your entry area is always going to be a little bit higher. You're going to get the first full true crack at a higher area 100% of the time. Not 100% of the time, but most of the time. Why? Because unless it's a 2 or 3 minute time frame and it's just hovering there, right? Most times at that point in time, if you're getting a trend line crack, it could have already cracked it in a 3 minute time frame. 3 minutes, it could have flushed down some more. So our entry here in a 1 minute time frame is close to 28. We'll just call it 27.9. So our entry here at the 2 minute time frame of a trend line crack, I would say it's really close to probably the same area. It's around the 27.9 mark. So now let's go into a 3 minute time frame. Now you kind of see why if you do a trend line crack here in a 3 minute time frame, it's kind of a little hard to get in sometimes, because maybe that crack's already happened and look where it's at. It's already, you're not going to want to, oh, well, a trend line crack, like I said, when it closes it. I mean, it still would have been good in the end if you would have held long enough, but that's why I like the 1 minute time frame. You're going to get higher areas. Here's a 5 minute time frame. You got a little bit higher area because of where it closed, the spike back up and where it closed back, where it closed, but that's the reason why. And you can still see, you still get a decent short out of it in any time frame, but you can overall tell that in a 1 minute time frame, 9 times out of 10, you're getting the best crack opportunity. Now, every once in a while, the 2 minute time frame is pretty good as well, but you can tell the more you go down, the longer time frame you have, which one's best. The 1 minute time frame. So I want to really break that down and let traders know. I didn't really bring that up yesterday, but the 1 minute time frame is crucial, and it's what I use in my shorts. I mean, even all the way to a 15 minute time frame, which I know some traders even use those. Look at the trend line crack that you could have still had. Opening and closing candles right here on the 27 mark, and it's down even more, right? And so still a good short opportunity, 100%. And so it can go down even more right here. As you can tell, look at this area right here. Here, back to the 5 minute time frame. I don't know if I put the 5 minute in there, but this old area, and you can see where it's why a 1 minute time frame, you can tell 100% of the time, and I'll kind of get through some different ones now. That was just AMC. Here's GME. Well, let's go through it. And what's usually the best time frame to get in? To me, a 1 minute time frame. Now, of course, I love using these because this is big stocks. Like, what? It works even on GameStop? Yes, it does. Look at the trend line crack and where we could have got in at. I will just call it hypothetically, I think it's 240. Yeah, it's 244. So we'll call it 243.75 we got in, something like that, right? That's a pretty good entry price, especially the fact that it cracked all the way down to the 230s area. That's a beautiful area to get into, especially instantaneously, right? Now let's go to different time frames we're getting into. Now into a 3 minute time frame. Actually, and for once, in a 3 minute time frame, as you can tell, it wasn't such a bad entry still. And of course, it also helps that we get such a massive pullback from it. But you can see, in my opinion, why I like using a 1 minute time frame. Now, you can still use 3, you can use 5, but your entries are going to be a little bit different. Your candles are going to move a little bit different. So you kind of have to get used to that as well. And that's why I like using a 1 minute time frame, because you can really hone in and identify when that trend line's fully cracked, when we've closed outside, when we've opened outside. And again, what am I waiting for? In the 1 minute time frame, let's go back to one we can truly see a little bit better. We can even use a 3-minute time frame, but we're waiting for a close and open outside the trend line, right? Of course, we have to go back to the 1-minute time frame where it's beautiful and you can see it clear as day, and why I like the 1-minute time frame the best, and why this was just beautiful to get in right here. Closed outside, opened outside. This is your entry price on the 1-minute time frame. GME, it's a little bit harder because it's such a big ticker, but you can see in the same thing, closed outside, opened outside, right where that red arrow is, that's your entry price, right? And so I just want to go back through and let you know that I do like all time frames. I'm not saying you can't use a 1, 2, 3, 4, 5. It just helps and works best most times after me doing trial and error for all you guys, so you don't have to, in a 1-minute time frame. Again, let's look at this play in a 1-minute time frame. Entry price close to that 975 area, closed outside, opened outside. Beautiful crack right here, right, team? This is beautiful. This is exactly what we're looking for. This is exactly what we want. This is exactly what we're in. Closed outside, open outside, we're immediately in. Especially when we see 2 red candles, we get a beautiful crackback. See 1-minute time frames, right? Closed outside, opened outside. That's what we're looking for. Closed outside, opened outside, 100% of the time. Now, of course, the double red candle is always great. You know, I'm sure every time you see this team where it goes red, red, it goes down even more. But I want to let you know that the 1-minute time frame is what we're looking for. You know, 90% of the time, that's what I'm in. You know, probably actually more like 98% of the time I'm in a 1-minute time frame. You can just see these trend line, like, because imagine this, team. Imagine this, and I forgot to put it in, but this one in a 3-minute time or a 5-minute time frame. 3-minute time frame. The trend line crack could have been right here. It could have started right here with the closing and opening candles, right? You want the best area, which is going to be in a 1-minute time frame. That's where it's going to truly identify where the trend fully first cracked. I just want traders to see that. I love, and I'm going to get back into more of what I'm looking for in these trades, essentially. In Wednesday and Thursday session, but I wanted to identify what I'm looking for in those trend line cracks one more time. And again, you know, waiting for a candle to close, and even if you got in here, close and open outside, close and open outside, and then down and to the left for my target price. So any of these, team, I'm going down and to the left. I'm in here, closed outside, it opened outside. I'm in right here at this green candle where it opened up at around the 9.5 area. So I'm going down to the left, down to the left. So where's my enter exit areas? I know 9.4 may be a little tough to start off with, but under this 9.4 area right here, I know I'm golden down to this, probably this 9.20-ish area, really probably in the end right around this area, around like 9.10-ish or so. And then in the end, what? The VWAP. And then I would have gotten all those right there. Of course, I had to be a little patient, wait about 30 minutes or so maybe in the end for all that move. But that's what I'm doing. And for stop losses, and I got that question earlier from Paula, what am I looking for? If I'm in right here and say it doesn't go down, it does go up. Well, I'm going up and to the left. And so up first, right? Up and then to the left. Up would be the old trend line up. And as I always say, if we get back above the old trend line up, you're probably going to get squeezed on. You might want to get out. Now, the more that old trend line gets up and out of the way, and just like say if it's super up, and say at this point in time it's in the $10 range, and you're in at say 9.50. Well, most traders aren't going to give a 50+ cent stop loss, right? So I'll go up and to the left, and now up this trend line now way too far up. So to the up and to the left, because now I'm using to the left, would be this little nugget area right here from 960 to 970. These upper shadows. That's my end all be all. That's my stop loss. I know if I get back over this 960, and of course it is high of day, but 960, 970 area, what's going to happen? It's going to squeeze and it's going to go even further. And so that area you need to look for your stop loss. And every one of them, it's the same thing. Say you're in here. You got in right here, the open and close of your candle. So you're in this candle right here. What do I always say? Old trend lines up resistance. You're good to go. So we know back above it, you need to get out. So you were good to go here. You didn't have to worry about it. But say if it did, where's your end all be all stop loss? Well, anytime back above the old trend line up, and I would say most likely probably at the 9, say 55-ish entry area. I'm not giving this the high of day at 690, 695. I'm going to probably go with this little area from 670 up to 675-ish and right above it. That area right through there, kind of like the shoulders, which ended up being kind of a head and shoulders pattern right here. The shoulders would have been my stop loss. And so like I tell Paula, every ticker, every day, every stock's going to represent a new opportunity of what the target is, up and down, whether you're, I should say what your stop loss, of course, going long, and what your stop losses are, or short, I should say, and what your stop losses are. And so every day, every ticker, whether you're going short or long, is going to have different targets, whether you're going, short and targets down or long targets up. Same with the stop losses. So every day it's going to adjust and it's going to adapt, and you have to adjust every day for sure. But I want you guys, and hopefully if there's any questions you can ask, are these examples? Let's see. Are all these examples for quick trades 1 to 5 minutes? No, Commerciante, you can hold these for more than 5. I mean, look at any of these trades. You could have held this for an hour plus. You could have gotten into the trend line crack at 10, and long as it doesn't get back above your Of course, you gotta at least give yourself the, like if you're going long, move your stop loss down, down, and down, and down. So as your stop loss never gets hit, you can continue to hold this trade. Say if your stop loss finally was, gets below the VWAP at this point in time. And now, of course, if it gets this low, you got to have a stop loss around the VWAP. Maybe it's just at 940. If you were in at 950, you've got to give your stop loss at least like 940 or, somewhere above your entry, or you know what I'm saying? So you leave the trade green. So that all comes back to your kind of management, what you want to do. But look at all these. Yeah, they can be 1 to 5, 10-minute trades, but they can be 30 minutes to an hour trade. I mean, we know, and we're kind of waiting on Peloton to do the same thing, finally get that nice big crack off from whatever trend line crack, support area, whether it may be. But all these I'm showing you, yes, 1 to 5 minutes are great. Sometimes up to 10 minutes, really good. But a lot of them are really good 30 minutes later, an hour later, if you're holding long enough. It then comes up to you where your stop loss is at. So if, like any trader should, if you're in here and your initial stop loss, to say the old trend line up, maybe high of day, we'll just call it that just for hypothetical reasons. You need to, as soon as it starts heading your way, your stop loss needs to be your entry. If this gets below the VWAP, your stop loss needs to be like 27 or something. It needs to be now ahead of your entry, so that way you're not even getting back to your entry price. You're going to leave it green no matter what. And so you can continue to, move that stop loss down until it finally gets hit. Or like I do a lot of times, say, hey, if like say this, it got down to 25 on a minute 27 plus, I'm taking all that. I'm not going to continue to wait for it to crack even more. I'm going to take a $2+ move. Now, a lot of traders, they get that in their mindset. 23's, they want more. They want more. Don't be greedy. I'm telling you, just take the, you get $2 move. You better be taking that. So hopefully that makes sense. Now, I want to get into these other slides real quick. Hopefully that makes sense for your trend lines, essentially, and what we're looking for. But real quickly, NVCT. Let's get into these shelves real quick. And this is the first example I want to get into, NVCT, early on this morning. And so I kind of brought this up earlier in chat, and I'm going to bring it up in the lesson right now. I look for nice areas of support, whether they're trend line, which just had that beautiful trend line, but also had it had only about 2, maybe it was 3, because this is in a 2-minute time frame, where it bounces off a certain area, a true support area, a horizontal line. That is also another good area for a short. And here's why. I'll show you a great couple of good opportunities. So the more you see these shelves built up, as soon as you go below them, they're going to be good shorting opportunities most of the time. So NVCT, below the $8 areas, you can tell. Yes, it had a beautiful trend line up, but it also had what? It had a beautiful shelf right here at about the $8 area, and really just right below it, maybe it's $7.90, $7.90-ish if you want to call it that. So below that area, you're going to get one of these numbers, right? And so that was the shelf I saw today that I was alerting in chat. Team, look for this shelf. And I'm telling you, when it cracks, it's going down south. Now, we didn't get the shelf break here because we didn't get candles closing and opening below it. And, of course, we had the lower VWAP band. But, team, when you see like this right here with SOPA, and you see, can I zoom in some more? I think I can. I think I can. So you right here, team. You get to right here, and you see this shelf, but it's on a spiking area. Team, 100% of the time, this shelf, when this cracks, say we'll call it 16, boom, 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 all that $16 area, when you start opening and closing candles, closing and opening candles below that, shorters paradise. Here's another great opportunity that I have, these were lately, these are shorts that I did take. Let's zoom in here. This was the one, if you do remember, NBJH, team. NBJH a couple weeks ago. I said, look for this shelf, team. Remember this shelf, this 2-5 shelf. I didn't get in, unfortunately, at the opening bell. I got in at the opening bell at the upper shadow, or right here. Remember the VWAP spike, but I was out. Already. It was a boom, boom. And then I said, oh, man, I should have been holding. Remember I said I should have kept holding? I was out of this within an instant. That was one of those instantaneous shorts because everything has been failing recently. But look at this right here, team. Look at this shelf that's being built up. And where's it being built up off of? Do you see that right there from pre-market? Oh, look at this right here from after hours from the day before. Do you see that right at 2.5? You do the math and put those two together with number 3. So you put 1 and 1 together and you get 2. And this right here equals a great short opportunity. Boom, wham. When those shelves get built up, you just saw NVCT. You're now seeing NBJH. What happens? They go crack Ola and they crack back nice and hard. I didn't get the picture of this after this crack back, but here's another one, AMC. If you remember me shorting the crap out of AMC the other day, team, where was AMC short? That 1730 area. This built up a little bit more, and I alerted this in chat because this was after the MDJH trade. It's the team. This is just like MDJH. It's building this shelf right at the opening bell, just like MDJH did. Of course, it's a different price, but it's building a shelf at that 1730 area. If we start closing and opening candles below this area, shorters paradise, and this collapsed right through this 1730 area. These are the shelves you're looking for. Here's another good opportunity, another good shelf. I could have put a line in right here. My sandwich area. It essentially is a shelf. Old support equals new resistance. Do you see that shelf I could have put a line in? We'll just go with the hand here like I'm waving it through right here at about that 1770-ish area, 1765 area. That was the area number. If you do remember me alerting that in chat, that was the other area to alert. 1765 crack was the first one. And so I'm just working my way back up. Those were the 2 alerts I gave for AMC the other day. Whenever that was at this spike, I forgot what day it was, but this was that day, right? I alerted the 1765 crack area. There was that sandwich area and that shelf right through here, right there. Then there was another one built. Oh, here comes round 2. Here comes the 1730 crack. When we see this crack fully, it's dumping, it's going down even more. And so we look for these shelves, team. Use those shelves. When you see these shelves built up, right here, here's one at the top. Boom. Didn't go all the way down, but this one, you see this shelf right through this area right here. And what I'll go with, I won't go with the upper area because we could get the bounces and it continues back up. I go with the lower shadow. The lower shadow. So the shelf to me would be right here. The bottom of this upper shelf would be right here. I'd call it 1830, 1825. I wasn't in pre-market, but it's a team. There's a shelf being built about 1825 mark. Watch for this to pull back and crack out of that area. Closing and opening candles below 1825 mark. You're going to get a pullback. And then look, it just dumped off from there. So that wasn't just beautiful from AMC the other day. It was so easy to go long, then short on this the other day. I've never traded. There's been a couple of tickers like that recently where they've been very easy to trade going long or short. And that was one of them recently, of course, going short more so than long. But these are the shelves I'm looking for, team. You see a sandwich here like this, old support equals new resistance. We move, or I should say, old support equals new resistance. So we move back above it. What happens when we move back down to it? Remember my sandwich area? Well, it's going to be a good bounce. Look at the great bounce right off of it. 1765, 1770 area, right back up. Now, not that a crazy bounce because we know longs recently until the last couple of days haven't really been there. But look what happened when you finally cracked that area, right? It's the same kind of thing. It's a shelf. Look at this shelf that was being built right here at 1730. So team, use those shelves that are being built. It's bouncing off of 5, bouncing off of 5, bouncing off of 5, hitting 515, 15, 5. It's just in a channel essentially, right? Keeps testing 5, but not really fully pushing. You better believe just hawk it team, because it's eventually going to crack 5. And when it does, it's going and in a hurry. And it's a great short opportunity. And so I wanted to get into that today. Round 2, what I'm looking for in shorts. Finishing up my trend line cracks, what I'm looking for. I'm always in a 1-minute time frame on any of these. I'm always in a 1-minute time frame. A lot of the reason why I'm also trading the first hour, 2 hours of the day. Most traders are in a 1-minute time frame at that time as well. It's not like I'm trading this, 2, 3, 4 hours into the day. Then at that point in time, I still like using the 1-minute time frame from trendline cracks and for support cracks, those shelf cracks. It's nice to have up so you can see where the pure crack is, so you can zoom in at that time of the day and see the crack itself happen. But I understand having a 2, 3, or 5 or whatever next to it just so you can see the full day. Secondly, besides opening and closing the candles outside of those areas, the time frame I'm in, which is usually a 1-minute time frame, to find those shelves, team. And we know trend lines, it's the same thing. So just turn that trend line over on its side. And so trend lines go up, and the more we see them test, the more we see them test, the more we see them test, eventually they're going to crack. Same with areas. If you just and put it right down on its side and go flat across, the more it does this, the more it does this, the more it does this, eventually it's going to go right on through, and you're just being a stock sniper, a patient warrior. Patient, I'm telling you, it pays off to be patient, team, right? You're just waiting for that crack to happen, and then you will be money. Hopefully that helps you guys out. Day 2 shorting bootcamp. Those are my top 2 strategies, team. Those 2 alone this year. I am in the last 3 weeks alone, of course, now after today, but I was 21 of 23 moving into now I'm 21 of 25, thanks to Piton, but still 21 of 25 in the past 3 weeks alone. Overall for the year, it's like I said, it's around that 30-ish of 35. I forgot what it is. I think I haven't had but maybe 5 total losses on the short side this year overall. Because I was going along a little bit more so to start the year. But those are my top 2 strategies. I'm using those day in, day out, and have a 80 plus, 85, whatever it is, win rate on the year with those.